I have to adjust some of these prices. Yesterday was rollover day, and I went through adjusting the prices, but there are so many lines that I sometimes miss some. This low is becoming less important. That's the neckline of the double top. This is a 60-minute chart. It's around here, so I'll leave that as the important price. And today's Friday, so weekly support and resistance can be important, especially in the last hour. And the single most important price today is this one right here, the green line, open of the week. The past 2 weeks, have not been what the bulls wanted. They had a high to buy on the weekly chart. The body was a little bit small. The entry bar was only a doji. We triggered a low one sell, so bear trend, pullback, low one, new low, pullback, low one. We triggered a low one sell, but I said there would be buyers below last week's low. However, there were not that many. At a minimum, the bulls would like this week to close with the bull body, so they want the week to close above the open. So this week's open is an important price right there. And last week's low is also important because last week is a low one sell signal bar. And I got to mark that down. I'm surprised I don't have that on the chart. That's last week's low there. The bears want the week to close below last week's low. Last week is a sell signal bar on the weekly chart, and the bears would like the week to close below the sell signal bar low, which is that line there. Market's been sideways on the daily chart for a few weeks. We had a very strong reversal up. I said nobody wanted to buy here. Everybody wanted to buy, but not there because the stop is too far. They wanted to buy a pullback, and I said we would test that low, which we did. I got to adjust these prices. On rollover day, sometimes I forget which charts I've adjusted and which ones I have not. But I have a whole bunch of charts with lines, and now that June is the front month, I got all these adjustments to do. Okay, it looks like I got all the daily chart lines. So daily chart for the bulls, it's a high one buy signal. We resume the bull trend, a higher low major trend reversal. A bad buy signal bar here. We're getting a second reversal up here yesterday with a better buy signal bar. And today's triggering the buy by going above yesterday's high. When the market was up here, I said this would probably be the low for the next several months. I said we probably would get a sharp sell-off that quickly reversed up. We got a sharp sell-off, but it did not quickly reverse up. And we may be forming a triangle here. So I said it was better than 50-50 that this was the low of the next several months. But because this did not go down quickly and up quickly, I think it's now 50-50 that we go below this low. We may enter a big triangle going into Wednesday's FOMC. So 1, 2, 3, and then up a day or two, and then down a little bit, and then the FOMC on Wednesday. Did I get the lines on the weekly chart? Yeah, it looks like I adjusted the lines on the weekly chart. 60-minute chart. Nope, gotta put them on the lows and highs. You can see June is lower than March. So that means traders think the market's going to go down over the next 3 months. So for the bulls, we have a gap up. They want a measured move up. And they need bull bars closing near their highs. If you're buying above the average price, you want to be paying for something that's above average. You want a bar that looks like that, and we don't have that. The bears are hoping that the price is too high and that everyone knows it's too high and that it has to go lower. Bar 1 does not look like traders believe the price is too high. So it looks like it's not bearish enough for the bears, it's not bullish enough for the bulls. Therefore, we need more bars, more information, more bars. So nothing to do here. Globex high and low are always magnets. We had this biclimax overnight, and when you get a reversal from the biclimax, the market often gets all the way down to the bottom of the biclimax, which is around 42.60, and 42.60 is also right around yesterday's high. So if we test yesterday's high, we'll also be testing the bottom of the biclimax. Traders bought here aggressively, and this is a test of that. And this may not be low enough for traders to believe the test is adequate. We may have to come down a little bit lower and get down to the bottom of the biclimax. Theoretically, some bulls who bought for any reason put their stop below, thinking that if the bull trend is strong, it should not get below the bottom of this very important low. So they'll put stops just below. And the bears know that, and the bears are trying to drive it down below there to make the bulls give up, and maybe we'll get a quick breakout down. I think the market is going to be mostly sideways into the FOMC report on Wednesday. We'll still get swings up and down. We have a little one here, up here, and down here, and then up there. I think we'll get at least 2 swings today. But, you know, I say this all the time. If the first bar of the day is a doji bar, that one bar increases the chances that the day is going to be a trading range day or have a lot of trading range trading. And if you start to get 2, 3, 4, 5 bars that are sideways with prominent tails, it further increases the chances that the day will have a lot of sideways trading. Remember, on the 15-minute Globex chart, we have a biclimax low here, which is a magnet. And it's also just below yesterday's low on the daily chart. Now, if we're probably going to go down to that biclimax low on the Globex chart, should we sell here? I would not, because we don't have to get there. The gap may stay open on the day session. And if I'm going to be entering with stops, I want bars that are good buy or sell signal bars. 1 is not. If 2 closes on its low, you will get bears starting to sell below 2. A lot of traders on the open want to see 2 consecutive bars. For example, yesterday we had a bull bar, and then a big bear bar closing near its low, then a bull bar, and a bear bar. And it's a low to sell, but you have 2 bull bars out of 4 bars, and you're far below the average price. Nobody sold it. So we had 2 attempts to continue the trend down, and then we got this, a bull bar closing near its high. So traders bought above that, or this high, which is the neckline of this double bottom, down, up, down. Possible high of the day, but even though 2 closed on its low, it's not especially big, and that means the market did not race down, and that means there's not yet a strong conviction that this is the high of the day. And 3, so far, is not collapsing. So here we have a sell signal bar, and we're at the top of the chart, yet not a lot of traders are selling. So not particularly bearish at the moment. More bearish than bullish. A bear bar closing near its low, and yesterday's high just a little bit below. So it looks like we'll close the gap. We have other magnets here as well. We have yesterday's high, that's always a magnet. Yesterday's close is a magnet. The moving average is a magnet. The 60-minute moving average is a magnet. So we have a lot of things pulling the market down. That means we're probably going to go at least a little bit lower. It's possible we'll go up first, but unless we go up pretty sharply, it looks like we're probably going to work a little bit lower. Bulls hoping this is a test of last week's low, and actually that's not last week's low. Yeah, it is. It is last week's low. I'm sorry. And they hope traders will buy below it. All week they've been buying below last week's low. So the bears are hoping this is the bulls are hoping this is the low of the day and the start of the bull trend. 15-minute chart here. Last week's low, we went below last week's low, triggered the weekly sell, but tested it, went above it, below it, above it, below it, above it. So the market is oscillating around last week's low. Last week is a sell signal bar on the daily chart. Lots of reversals over the past 3 weeks. You can see that on the weekly chart. We have a big tail below. We have a tail up and down, and then tail below again, and tail down here, tail up there. So it looks like the weekly chart is starting to get trading range bars for the past 7 weeks. Now, what about buying above 3? Is it bullish enough to buy above 3? Well, the first 3 bars, let's say 3 is perfect, closes on its high. That would be good for the bulls. But what about the other 2 bars? One's a bear bar, closing on its low, and the other is a doji bar. So this is not yet a strong buy. Also, look at the size of the bars, and look at the size of these bars. They're not all that big. On the open, you often get bigger bars, and we're not getting bigger bars. So there's not a sense that the price is wrong. There's a sense that it's probably everything's just about right. You know, traders are not eager to sell below things, betting the price is too high, and they're not eager to buy above things, betting the price is too low. So for the bulls, it's a bull trend since early yesterday, and it's a high one buy, pullback from a new high, but it's a doji bar, and all 4 bars overlap one another. So better not to take the buy, better to wait. Limit order trading. Big bear bar, they bought the close of 2, they bought more 5 points lower. When it got back to the close of 2, they exited break even on their first buy and with 5 points profit on the second. One, a bull bar, they're only a doji and a gap up. So they sold the close of 2 and scalped out 5 points, 10 points. Limit order market, bad for stop entry traders. At least it is right now. Wait for evidence of a trend before placing trend trades. Stop order swing trades are trend trades. You're betting the market will continue in your direction. Trading range, the computers are limit order trading. Anything bullish, they sell. Anything bearish, they buy. They buy below things, buy more lower. They sell above things, sell more higher. And that's fine if you're a computer. It's fine if you're really comfortable with a lot of experience and you can do it successfully. But most traders should just patiently wait for stop order trades. Yesterday, we had a high 2 buy with a good buy signal bar. We had an II with a good buy signal bar. Then we had a wedge with a decent bear bar. Over here, a higher low major trend reversal, a wedge, IOI, a second buy, good stop entry buy. Here, reasonable sell, possible final flag, wedge, 1, 2, 3, but trading range probably minor. The war is on the news all the time, but equally important and more important over the long term is the FOMC. And Wednesday is going to be the first time they raise rates in years. And we don't know how the market's going to respond. But I do know that this is not what the bulls want. Daily chart here. Wedge, 1, 2, 3. Very strong bull bars. Many big bull bars closing near their highs, and again here. So you'd expect, if you're looking for a higher low, you want it to go down, and you want the bulls to buy it aggressively and for it to go up sharply. It went down 2 days, not just one. The reversal up so far, not very strong. So it's more neutral than it was over here. This is very bullish. And now I think 50-50 chance we're going below and maybe try to get a wedge down below 4,000. Monthly chart, we have a gap last year on the monthly chart. Right here above the March high, and that's just below 4,000, so that's a magnet as well. This is the high right before the pandemic. There's a 30% chance this is going to get down here before we make a new high. 70% chance we'll get a new high before we get down here. This is a very strong bull trend, probably a minor reversal. It may be sideways for a year or two like this, but I doubt it's going to lead to a bear trend. Bear trend is a series of lower highs and lower lows. This is a bear trend, and you get them about every 10 years on the monthly chart. On the daily chart, you get them about every year, but on the monthly chart, they're rare. So chances are this is a strong minor reversal in a bull trend and not the start of a bear trend. I still think we're going to get at least one more new high before we get a bear trend. We may get many new highs before we get a bear trend. However, I also think that the market is going to enter a trading range for a decade, like we did back here. There's always a reason. Here's a cash index. Extremely strong bull trend. The strongest bull trend of my trading career began in 1995 when the Republicans took over Congress. But 50% correction and 50% correction. And you say, well, how can that happen when the market's so strong? It happens because on average, the market goes up 8% a year. And if it goes up 20 or 30% a year for 5 years, it has to have some down years to get back to 8%. And you often have to get a lot of them. So that's why it often goes sideways for 10 years. It did that again in the late 60s and 70s. Very strong bull trend, and then sideways for 10 years with big corrections, 20%, 30%, 40 or 50%. And I think we're at that point. We're at this point again. This might be the final high. That might be the final high. That might be the final high. So we don't know if right now the market's at this point or at this point. We don't know. It's impossible to tell. But I do think we're going to get this over at some point in the next few years, starting in the next few years. 87 crash. It was a disaster, the most dramatic event of my trading career. Yet it was just a blip, just a couple months down. Is this the top climax? No. Is this the top? Is this the top? Is this the top? You don't know until it starts going down. Is this the top? Is this the top? And we're at that point now. Are we at the here? Are we here? Are we here? Or are we here in the start of a bear trend? We don't know. Not good entry bar for the bulls. For the bears, a double top, but not a good sell signal bar. So better to wait. Back to the monthly chart. I've been saying since late last year, we might form a parabolic wedge and get a couple legs sideways to down. I said we would get at least 2 bear bars. We have it. And I said I thought we might get a third bear bar, but I thought more likely it'll be, if we were going to get 3 bars down, it'll probably be interrupted by a bull bar like this, bear, bull, bear. And right now we have 2 bear bars. We're halfway through the month. We don't know if March will be a third consecutive bear bar. But like I said, I think the best the bears will get is the trading range. Bottom of the range might be 4,000, might be the 20-month moving average, and might be this gap. Less likely it'll be all the way down to the pre-pandemic low. We did not pull back to the 20-month moving average. Hard to see, but last month's low did not hit that average, and that's a problem. We've been above the average for a long time, and it's been support. We've pulled back to it regularly, and we're not down to it. So we may have to go sideways for another month or two or three until the average gets above the low of one of these bars. Markets often do the same thing that they did yesterday. They often do the opposite. Yesterday, a gap down, high 1, high 2. Today, a gap up, low 1, and trying to get low 2. It's better for the bears if 5 does not go below 4. If 5 goes below 4, then 4 is the sell signal bar. And like 1, it has a bull body. And not a lot of bears want to sell below bull bars. So we just triggered a low 2, a micro double top, but a bull bar. And that's not going to attract a lot of sellers. They will sell if 5 or 5 and 6 become big bear bars closing near their lows. But stop order bears, right now, it's not good for stop order trading below 1, below 2, above 3, below 4. So still better to wait. Remember I said there are 4 magnets here. Two moving averages, yesterday's high, yesterday's close. And I said the market will probably get down to this area. What about selling below 5, a big bear bar closing near its low? Oh, you're selling just above a magnet at the bottom of a tight trading range. So, I think it's probably better to wait. We're below that buy climax low on the Globex chart. We're below that low. %90 chance for either going above the Globex high or below the Globex low. Right now we're in a bear trend, so it's slightly more likely. Plus we're closer to the Globex low than the Globex high. So right now it's slightly more likely we'll get here. But 1 or 2 big bull bars would make it more likely we'll get that Globex high. So unclear. Globex low is around here, around this breakout point. Double bottom, higher low double bottom, neckline, breakout. By the way, every major trend reversal is some kind of a double bottom. Sometimes it's a higher low, sometimes it's a lower low, but the sell-off is a test of the prior low. So the reversal up from the major trend reversal is a reversal up from a double bottom. Also, I want to say something about disappointed bulls and bears. Breakout 64, disappointment 65. The buy the close bulls 64, after they see 65, decide to get out break even, and they did on 66. And that micro double top often leads to a reversal. On a smaller time frame chart, it's not a micro double top, it's a double top. And here you got a double bottom. On a smaller time frame chart, it's a micro double bottom. So micro double bottoms are important because they are actual double bottoms on smaller time frames. And every double bottom that you see is an actual double bottom on a higher time frame. So yes, let's do this. So 11:55, we have a micro double top on the 5 minute. On the 1 minute chart, we got a small double top. 15-second chart, it's a big double top. 5 minute chart, a higher low double bottom. And 60-minute chart, a micro double bottom, down, up, down, up. Bears do not like the sell signal bar 4, and they want confirmation of the selling. And confirmation means a second consecutive strong bear bar. And so far, that's not what we have. All right, so it's still limit order trading. Now, this is a micro wedge. Do you see why? On 1, we went down a little bit and then up, and then down, up, down, up. So this low, that low, this low, the 3 of them are creating a micro wedge. And the breakout test of yesterday's high, the gap is still open. That low is above that. Can you buy above 6? it's not going to be a good enough buy signal bar. But if it was a really good buy signal bar, then yes, you could buy above it. All right. It still looks like we're going to close the gap. I said there were 4 magnets here. We have not reached even one of them yesterday's high, then the moving average, the 60-minute moving average, yesterday's close. So not a good micro wedge buy. It's follow through for the bears, but 5 was not all that big. It did not close below 3. So just went below yesterday's close. Now, why did anybody sell the close of 6? The bulls wanted a micro wedge, 3 bottoms, 1, 3, 6. But they wanted a bull bar. And when they saw they were unable to get a bull bar, what did all the bulls do who bought during 6? The bulls who created that tail, they sold. And that's why we got this bear bar. The bulls tried hard to get 6 to be bullish, and they could not. And then as soon as 6 closed, they sold. There's often a report or a news announcement at 7 o'clock. So bar 7 often is a big bar one way or the other. So you can argue that 7 is purely due to an announcement. It's not. It's what I said. It's technical. The bulls anticipated the announcement might not be good at 7 o'clock, and not enough bulls were willing to buy to create a big buy signal bar 6. And then when the news came out, everybody just dumped. And the technical traders dumped simply because 6 was not a bull bar. I said 5 did not close below 3. Bears are trying to get 7 to close below 6, and then they'll try to get a measure move down to the Globex low. They want an open gap, a gap between the close of 7 and the low of 6. And if they get it, that gets us down here, which is near the Globex low. Does it sell the market, sell the close yet? 6, there are 2 reasons to sell it. One is the one that I said, and the other is the bears had a big bear bar 5, and they wanted a bear follow-through bar. They got a bear body 6, so those bears sold 6 as well. Other bears are chasing it down. They're selling as it's going down. Just sell the market and keep your fingers crossed that it goes low enough to make a profit. Well, some of the bears take profits at 10 points. Well, they will. Some bears sold the close of 6, and they're able to get 10 points profit. They'll take partial profits. We're entering this trading range, but we still have magnets below. 60-minute moving average, the bottom of the trading range, Globex low, and the measured move. Can you buy the close of 7, betting that limit order traders have been making money all day? Some will. They'll buy the close of 7, especially with that tail, especially with it at yesterday's close and the moving average, but they'll probably only scalp. A big enough bear surprise, we should get at least a small second leg sideways to down. Bulls high 2, 3, 8, but bear surprise and other magnets lower. So we probably will go lower. That will reduce the number of bulls buying above 8. Can 8 do anything to convince traders it's the low of the day? Probably not. You know, if it totally reversed 7 and closed up on the high of 7, traders would start to think it was a buy. But if it's a bull inside bar closing on its high and not especially big, I think bears will get out above 7, but not a lot of bulls will buy, especially since we have magnets below. For the bears, even if it's a bull bar, it's a low 1 in a bear trend. But if it is a bull bar, most stop order bears will not sell below because there might be buyers not far below 60-minute moving average, measured move, the bottom of this trading range. China announced their target for GDP for the coming year, 5.8%. And you say, wow, 5.8%, that's really bullish. Okay, the daily chart is Alibaba, China's probably most important stock. So look what it's doing. It's continuing to collapse. Alibaba is a Chinese version of Amazon. It went from 300 to 100, and no sign of a bottom, even with China talking about a pretty high GDP number for 2022. Then there's a ETF, KWEB, which is an ETF, a basket of Chinese stocks. Went from 100 to 25 now. So it lost 75% of its value last year. Weekly chart. Here's the pandemic, pre-pandemic. Well, this is the pre-pandemic high. We're far below the pre-pandemic high. So if China is so bullish, why are we doing this? All right. Why does the daily KWEB China ETF look like this? Well, there's only one answer, and that is China is not so bullish. Something's wrong. Can you sell the close, sell the market? We're always in short. First reversal up will be minor. So traders will sell the close, sell the market. If we do try to reverse up, first reversal up will be minor. They sell more, betting that we'll at least get a second leg sideways to down. Like 64, a very big bull bar, probably going to get at least a small second leg sideways to up. So traders buy it. And bear bar 65. Now traders think, well, maybe it's not going to go up. I'll get out break even. They place a limit order to get out around where they get in on the close of 64, and we get the micro double top. So same with here. You buy these closes confident that one of two things will happen. You'll get much higher and you'll make a lot of money, or it'll stall and try to get at least a small second leg sideways to up, and that will allow you out break even. Doesn't always happen. Buy the close here, bear bar. Usually better to get out, but whenever you have a reasonable buy, the market will probably get back there, which it did, but you had to sit through all of this. It got back there before it went to the bottom of the bull trend. Now, what about this? Is that a reasonable buy? It's less reasonable because it's already a second leg up, one pullback, two. So I would not buy that. Also, it's a wedge, 1, 2, 3 at the moving average. So I would not buy that. But this, it's the breakout, the initial breakout. We should get a second leg sideways to up. This is another breakout attempt, but it's already a second leg up from that. So there's less likelihood that we'll get a second leg up after we get the reversal. Also, as I said, it's a wedge rally to the moving average after a gap down. That's a good sell signal. Bulls, high 2, bar 3, but 4 decent-sized bear bars, probably a minor reversal. We might be testing yesterday's high, maybe even last week's low again, but it's the probability that this is the start of a bull trend is small. So a lot of bulls will not buy above 9. They'll wait to see if we get 2 big bull bars and then buy. Bears will sell the 8 high, limit order bears, and sell more 5 points, 10 points, 15 points higher. Most individual traders, especially traders starting out, cannot do that. They cannot sell and then add on 5 points higher, 10 points higher, 15 points higher, because the position will be too big and they'll get too scared and they'll exit exactly at the top right before it reverses down. So better to just patiently wait for stop entry trades or for strong breakouts. So the bulls, high 1, 3, high 2, 8, but 4 bear bars, probably a minor reversal. The bears are hoping it's a sell climax at support. We have a cluster of support here. They want it to be the low of the day, but probably a minor reversal. Better to wait for 2 or 3 consecutive strong bull bars before buying. Sometimes you get a really dramatic sell-off on the open, a gap up, a sell climax, and a reversal up. Gap up, sell climax. We got a second leg down, but that was the end of the selling. Sell climax, and an II is always at least a micro double bottom, and it's usually a wedge. So traders will buy above that or above the bull bar. Two-legged sell climax, a three-legged sell climax, a wedge. Sometimes it just goes straight down and straight up, but that's unusual. Normally, if you get a pair of decent bear bars, you're going to get at least a small second leg sideways to down, like this. A lot of bear bars, bull bar, a second leg sideways to down. Bulls will be more willing to buy a second reversal up. Sometimes you just collapse and go straight up. A bull bar, big bull bar, closing on its high, bull follow through, traders will start to buy closes. A series of sell climaxes, three legs down, a wedge, very good bull bar here, good bull bar here, a third good bull bar. When you keep getting good reversals after the bear breakouts, it increases the chances that you will get a reversal. Parabolic wedge, or you could simply call it a wedge. 1, bounce, 2, pause, 3, a bull bar, a second bull bar, a third bull bar. The more bull bars you get, the more likely you're going to get a swing up. Micro wedge, sell climax, a bounce with that tail, and then a bull bar, a bear bar, and a second bull bar. So it's a little bit of a micro double bottom. Down, up, down. Neckline is the high of that bull bar, so you can buy above that bull bar, or you can wait for 2 to 3 bull bars. It doesn't matter if you enter late. If it's going to be a swing, it'll go up for 2 to 3 hours, and there'll be a lot of profit potential remaining. So it's perfectly fine not to take the first buy and wait for more bull bars and buy late. You're buying for a swing, higher probability to wait until there's more evidence that a swing is underway. So higher probability, less profit remaining buying here than here, but a higher probability. So never worry that you missed the very first buy. Sometimes the very first buy is a low probability buy. For the bears, a low one below 9, but a bull bar at the 60-minute moving average. Not a good sell below 9. And for the bulls, a 2-bar reversal, but big tail, not a good buy above 9. So bears, okay to get out above a bull bar closing above its midpoint, 9. And for the bulls, it's a possible low of the day, but I think not strong enough to buy with a stop above 9. Bears trying to get a low one, 8, low one below 9, a low one below 10. We still have a measured move target here, and we tested this price level many times yesterday, so we're probably going a little bit lower. Globex 15-minute chart, Globex low. At this moment, what's more likely? Are we going above the Globex high or below the Globex low? It's more likely we're going here. And we know there's a 90% chance we either go above that or below this. So right now it's more likely we're going here, which is around 42.25, which is down here. So right now we're probably going to end up going somewhere down here at some point today. Not necessarily in the next 3 bars, but at some point today. Sideways with 3 bars, tail, tail, tail. Hesitation in the support zone. Yesterday the market thought this was a fair price. We're back there. Probably sellers not far above. Low one, but a doji right above the 60-minute moving average. And for the bulls, it's a high 2, bar 8, a micro double bottom, down 8, up 9, down 10, but not a good buy, minor reversal. Bears, they can get out 3 or 4 or 5 points above a bear bar 10, 1 tick above a bull bar 9, and then sell again. And stop order bears, it's a low 1, but we're right at a support zone. Bears are trying to get a swing down. It's okay to sell at the market, at the close of 10, below 10, below 8. It's okay to sell, but stop is a little bit tricky. Right now, reasonable to put a stop above a bull bar 9. 3 sideways bars, tails, 4 sideways bars, So there are going to be limit order bulls buying below 10. I did not sell below 10, but I think it's okay to be short because this could be the start of a bear trend. And bear trends often use the moving average as resistance trading range, but then once we got below the moving average, anytime we get near the moving average, they sold. And the bears are hoping that this is the start of it, below the moving average, near the moving average, and they're hoping that we just keep finding sellers. Sideways broke below the moving average. Moving average becomes resistance, resistance, resistance. Got below the moving average, they sold. They tried to get above, double top, they sold. Moving average, they sold, sold, sold. Gap down, wedge rally, moving average, a little bit higher, they sold, sold. Anytime near the moving average, they sold. Most bars today, in fact, every bar today, has at least one conspicuous tail. And even though we're in a bear trend, the strongest bear trend days get some bars with no tails or very small tails. So this is consistent with what I said at the close of bar 1, trading range price action, and then 3, 4. So we're in a bear trend, but not strong. So we'll probably have at least a couple hours of sideways or up trading at some point today. It can become stronger. Sometimes a trend day will start in a weak way and then accelerate. Here, it was not all that strong. Tried to bottom sideways for a couple hours and then just kept going down. But most of the time, here, close on the low, close near the low, close on the low, close on the low. We're not getting that today. We may get it, but so far we're not getting it. 7, 8, strong enough to get at least a small second leg sideways to down. And 11 is that minimum sideways bar. The bears are hoping it's down. As I said, we're probably going down to the Globex low. But we may not go straight down. We may go sideways or bounce before we go down. Opposite of here, high 1, high 2, but a bear bar. Low 1, low 2, but a bull bar. So a trading range type of behavior. Bad signal bars, bad follow through. Bears, do they have to get out above 11? I would get out above a bull bar 9, which is about 5 points above 11. And for the bulls, it's just not good enough to buy with a stop yet. You got limit order bulls buying below weak sell signals, below 10, but most of them are scalping 5 points, maybe 10 points. The bulls want a bull surprise, 1 or 2 big bull bars reversing this, erasing this, and then they'll buy. When you look at the chart and you say, no, it's not supposed to be doing that, right? That tells you you're in a trading range, right? When it does, if you're looking at this, you say, wow, a bear trend. And you say, wait, it shouldn't be doing this. If it's a bear trend, it shouldn't be doing this. And you get torn up inside. Well, instead of getting torn up inside, what about saying it shouldn't be doing this, and therefore it's not much of a bear trend? So instead of saying it's a bear trend and it shouldn't be doing this, why not say it was a bear trend, but it's not a very good bear trend, and therefore this is consistent with it not being a strong bear trend. Bears want micro double top 9, 12, and bulls want 12 to close above the midpoint of the first hour. There's the midpoint of the hour. We still have another minute and a half left. and the bulls want the first 60-minute bar to close above its midpoint. If they do, I typically say the bulls won the bar. They own the hour. And the bears want the hour to close below the midpoint, which it probably will, because we're probably going to go down to the Globex low, which is down here. So it's bearish, but it's not as bearish as the bears want. A minute before the hour closes, can the bulls suddenly get a big bull bar closing on its high above the midpoint of the hour right here, or not? Low 110, low 212, but the bears would like a bear bar if they're going to sell with a stop below 12. And they do not want a bear doji 10. They want a bear bar with a decent sized bear body. They're probably not going to get it. The bulls want a big bull surprise bar. They're probably not going to get it. The bulls not getting what they want. They don't want to buy high. The bears not getting what they want. They don't want to sell low. So it means it's still a limit order market here. My finger was on the button to sell below 12 if it had maybe a 2 or 3 point bear body. Did not. And I did not get long above 9. Not strong enough. I'm currently flat. Can you sell below 12? We're always in short. We're below the moving average. We have a magnet down here. You can. I prefer to sell below a bear bar, especially when it's in a tight trading range. So for me, unfortunately, I'm not taking that sell. You can see a low 2, but not a lot of sellers below 12. Even though we're probably going down here, we don't know if we're going to go now or up and then down. Traders hoping it becomes sell to close. They want to see bear bars closing on or near their lows. We're right at the 60-minute moving average, which is a strong magnet. When we're above it, it's support. When we're below it, it's resistance. And then we're also in yesterday's trading range. The market was sideways here for 2 hours. Increases the chances we're going to go sideways again, and we are. This looks like this. Not good for stop entry traders. Bears want bars closing on or near their lows. That will increase the number of bears willing to sell below. And bulls would like to get a better buy signal bar, better than 8, 11. Bear bar closed near the low. Are traders selling it or buying it? What's 14 doing? It's going up. That tells you that a lot of traders are buying the close of bear bars, betting that the tight trading range will continue, and fewer traders are selling the close, betting that we're going to break below the tight trading range. I think we're going lower, but as I said, we may go higher first. Bull, bear, bull, bear, bull. Bull, bear, bull, bear, bull. Will stop order bulls buy? Yesterday was a gap down, so it was far below average prices. Here we're right at the average prices. So I think there's less reason for bulls to buy above 14. Possible low of the day, but top of a tight trading range. So really not a strong bottom. A lot of bulls want to see a big reversal up, a big bar reversing 7. Now, will bears sell the close? Well, a lot of them will. We're in a tight trading range near the top, and we have a bull bar. Traders know a lot of bulls will not buy above 14, so bears will sell with a limit order at the 14 high, or they'll sell the market on the close of 14, looking for another 5-point scalp. Possible low of the day, but the single biggest problem the bulls have is the Globex low. Right now, it's still more likely we're going below that before we get above that. But it's possible that this is the low of the day, and we just trend up all day and go all the way up to the Globex high. 75 points above where we are. Unlikely. Here, 25 points, 30 points below where we are. More likely. 10% of the time, we do not break out of the Globex range. And that 10% is much more likely when the Globex range is very big, like today. Since the odds favor a breakout of the Globex range, and the Globex high is probably too far to reach, the odds favor this being a minor reversal and for the market to go down here at some point. Now the bears have a wedge, 3 legs up, 9, 12, 15, and they're hoping to get a sell signal bar, a bear bar closing on or near its low and closing below the moving average. And bulls are trying to get a successful breakout above 12 and then a measured move up. Double bottom, 11, 13. You can call it a triple bottom. You can see it went up about 7 points, so the bulls were able to scalp out. A limit order market, bears sold the close of 14, sold more 5 points higher. Bears sold the 12 high, and they were willing to sell more higher. So anything that looks bullish, they sell. Anything that looks bearish, they buy. 13, 8, and they scalp. So you constantly get reversals that do not go very far. This is a wedge bear flag, bear trend. So it's a decent sell if 15 is a decent sized bear bar, maybe a 2-point body closing on its low. Otherwise, it's still a limit order market and better to wait. A bull doji, not a good sell signal bar. I cannot see the bull body here, but on my other computer, I can see it. On my other computer, I have, now let me show you what I have. I'm going to close this, turn this off for a second, and show you what I'm looking at on my other computer. I know I have a copy of it on this computer. Okay, this is what I'm looking at on my other computer. I have a close-up here so I can see that this bar is a small bull body. The reason I have that close-up window is I'm trading on laptop computers. This is a 13-inch screen, and I cannot quickly see exactly where the low of this bar is. But when I have that close-up screen, I can see exactly where the low of the bar is. So if I'm going to be entering with the stop, I can see exactly where I have to put my stop. The bulls are hoping 16 is a pullback from a bull trend 14, and the bears have a wedge, but a doji bar after a bull bar, so nobody wants to sell below. The bears see 15 as a wedge bear flag. The bulls see 15 as a pullback, and an early small pullback bull trend began here. Small pullback to a higher low. 13, a small pullback to a higher low. 16, a small pullback to a higher low. It's subtle, but early bull trend. Slightly higher high, higher high, higher high, higher low, higher low, higher low. It's not attracting a lot of buyers yet, but the bulls are hoping that we suddenly break to the upside and undo 7. Globex market tested the bottom of the buy climax low. Day session trying to test the top of the sell climax high. We're around a 50% pullback. The bulls want a breakout. 12 went above 9 but did not close above 9. 15 went above 12 but did not close above 12. So we're not getting breakouts. 17, the bulls wanted to close on the high of the bar and above 15 for a possible breakout above the wedge top. And the bears are hoping we're still forming a wedge bear flag and that we get down to the Globex low. Here, a micro wedge and then a breakout. A micro wedge and a breakout. Here, a wedge. The bulls want a breakout. They want a big bull bar closing on its high and far above the top of the wedge. And the bears hope breakouts keep failing. Bears keep selling at a prior high and selling more higher. I'm currently flat. Is it always in long yet? Well, we were always in long, probably 7 or 8. And the bulls, we're always in short, 7 or 8. And the bulls are trying to get always in long, but they're unable so far to get consecutive bull bars, consecutive big bull bars. They can also get always in long by just a whole bunch of small bull bars. If they get 3 or 4, 5 consecutive small bull bars, that can make it always in long. If you're flat, that's a reasonable choice. Subtle, right? But close below 15 high. Close above 16, so it's a breakout, but not a very good one because it did not close above 15 and did not close near the high of the bar. It will attract fewer by the closed bulls. Is that enough bars for always in long? It probably is, but always in long does not mean that it's necessarily a buy the closed market. It's really not strong enough. Not a lot of traders are buying the rally. When you have a rally and it's persistent like this, we're getting 5 bull bars here, right? Traders want to be long, but when you have tails on the top and we're not getting big bull bars closing on their highs, traders prefer to buy pullbacks. You can see they bought below 10, they bought below 12, they bought below 15, but we're not getting big bull bars closing on their highs, so we're getting fewer bulls buying at the high. What about selling? It's becoming increasingly bullish. We're starting to get a series of bull bars. Okay, you see what changed with 18? It's a bull bar closing near its high, and it closed above the high of a prior bar, 17. That will reduce the number of bears selling the close. And for the bulls, is it buy the close yet? It is, but it's really, the bars are not very big, and we have a whole bunch of tails. And so far, the day looks like a trading range day. So I'm currently flat. Can you sell below 19 if it's a bear bar? Wedge 12, 15. Well, with the 3 bull bars and 5 bars in a tight channel, I think a lot of the bears would like the market to stop going up, start to go sideways with 3 or 4 bars, and then look to sell. Just like down here, they did not buy above 8 or 11. They waited for it to go sideways for several bars, and then a bull bar closing near its high, they bought above 14. Reversals every few bars. So far, a bad day for stop order traders. Breakout 18, close above the high of the prior bar, close above the high of the past 10 bars, but only a small breakout, conspicuous tail. At a minimum, the bulls want no bear bar, 19. That would increase the chances that we'll keep going up. You'll start getting more traders buying the market and buying with stops. If you're flat, that's a reasonable choice. This is not a strong bull trend. To short below 19 with the 5 bull bars, despite the wedge, it's a breakout test of 3. We broke below 3, and we're testing the 3 low. But with the 5 bull bars, I'm not going to sell with a stop. You have limit order bears selling every bull bar and above the high of the prior bar. and scalping, but stop order bears, I think it's not a strong enough sell below 19. Reasonable for bulls to get out. It's a lower high major trend reversal. Bull trend, bear breakout, lower high. It's a wedge, but it's a tight bull channel and a small pullback bull trend. So it's probably a minor reversal. Bulls get out here below 19, a bear bar closing below its midpoint. Bears, some bears will sell, some will wait to see if it becomes stronger. Tight bull channel lowers the probability for the bears, increases the chances that we'll go sideways more. A lot of this is bulls panicking out. Small pullback bull trend. They were hoping a small pullback. They're not getting it, and they're dumping. Is it clearly bearish? No. We're in the middle of a developing trading range. The bulls want double bottom 16, break above the neckline, measure move up to a new high. Bears are hoping this is the start of a bear trend, but 5 bull bars in a tight bull channel make it more likely we're going to go sideways. Is it still a small pullback bull trend? It might be, but the bulls will need a bull bar within the next 2 or 3 bars. Not good sell the close, not good buy the close. Limit order traders are buying bear closes and buying below bars, looking for scalps. And for the bulls, for the bears, are they selling? We have consecutive bear bars, but not very big. At least one closed on its low. I think the bears need one more bear bar, 2 closes below the moving average, with one of the bars relatively big, closing on its low and completely below the moving average. So if 21 closes down here, it could become sell to close. Bears want a relatively big bear bar closing on or near its low. Then we'd have 2 closes below the moving average, with one having a body completely below the moving average. Couple bear bars closing below the moving average, at least one completely below. Couple bear bars closing below, both bars, the bodies are pretty much below. That increases the chances we go lower. Couple bull bars closing above the moving average with at least one body completely above increases the chances we go higher. Bears need bars closing near their lows, and they need bars closing below the low of the day. The last time we had a bear bar at this price, 8, they bought it. 13, they bought it. They bought the close. So bearish, but not yet strong enough to make a lot of traders sell closes. Strong trends are clear. This is not yet clear, not yet a strong trend. The rally, never very clear, not a strong trend. Globex low, magnet below. This could be the start of a move down there, but we may bounce before we go down, just like here we bounced around the 60-minute moving average. Bear body completely below the moving average, consecutive closes below the moving average. Good for the bears, but not a very big bar. Plus, we're still above the bottom of this tight trading range. So, not very good sell to close. If you do sell, it's better to trade small, put a stop above 18, or get out 5 points above a bear bar, and then add on if we continue lower. This is not very good trading. Bulls higher low, double bottom, but 3 consecutive bear bars, probably minor reversal. Reasonable for bears to get out above a bull bar closing over its midpoint, but we may form a head and shoulders head and shoulders top bear flag, left shoulder, head, and then sideways to up a little bit for right shoulder, and then get a breakout and a measured move down. Remember, the Globex low is around 42.25. Double bottom, but probably sellers above using wide stops and scaling in. For the bulls, I would wait. Breakout mode for the bulls is double bottom 13.21. They want to break above the neckline 18 and measure move up to a new high. The bears are hoping this is a minor reversal and that it forms a lower high and that we break below and fall for a measured move down. Breakout mode means the probability of a bull breakout is about the same as for a bear breakout. I think it's slightly better for the bear breakout because we usually break out of the Globex range and we're much closer to the Globex low than to the Globex high. So it's more likely that we're going down here than up here. If we go up, I do not think we'll get to the Globex high. So if we go up, we probably will not break out of the Globex range today. Limit order bears, sell 22 high, sell more higher. Stop order bulls, not a good enough buy. I have been taking limit order trades today. I did sell at the market 7, but all my other trades today have been limit order trades. I did not sell the 22 high, but I did sell a couple points above 22, and it went down. Where did I sell? Yeah, I sold 2 points above 22, and it fell 5 points, so I scalped out half. But I'll be quick to get out of the other half if it starts to turn back up. For the bears, 3 bear bars, a bear trend, a low 1 with a bull doji just above the 60-minute moving average and at the bottom of a tight trading range. So not a good stop entry sell. I'm still short a small position. I'll add if we start to break strongly to the downside, and I'll exit if it does not go down or if it starts to turn back up. Trading range, right? Breakout mode. So I'll probably get out soon. And if it starts to go up a couple of points, I'll just exit. The bears are hoping that we get a bear inside bar closing on its low or a better low 1 sell signal bar. Bears trying to get the breakout. New low of the day. The bigger the bar, the more it closes on its low. The further below the low of the day and the 60-minute moving average, the more likely we'll get the measure move down. It's already better than 50-50 that we're going to go down. I'm still short, and I'll add to my short very soon, probably during this bar. The bears want a breakout and a follow-through bar. The bulls hope for a failed breakout. Bulls hoping for a big high 2 legs down, 1 pullback 2, and the bears are hoping for a measured move down. And follow-through bar is important. Traders want trends. Most traders, it's easier to trade them, less work. Institutions don't care. The computer algorithms don't care. But if you're a discretionary trader making decisions and placing trades, trend trading is less work, so it's easier. Not an especially big breakout. Bulls hoping to get a bull bar 26. Bears will exit above a bull bar. Will the bulls buy? Betting on a failed breakout. We're so close to the Globex low that smart traders are aware that we got a pretty good magnet about 15 points below where we are. That will make them less willing to buy a reversal up. 15-minute Globex, traders are hoping this is a final bear flag, that this breakout will form a double bottom, and that we will reverse up. And it could. We still don't have to break below the Globex low. As I said, reasonable to get out of shorts above a bull bar. And for the bulls, if it closes on the high, it's a reasonable buy. It's a nested high two legs down, one pullback two, one pullback two, double bottom here. So bulls will start to buy. Some bulls will wait for two bull bars. Sometimes you'll get a bad follow-through bar, and then the next bar becomes a bear bar. Just like yesterday on the way up. Breakout 52, bad follow-through 53, yet the bull trend resumed. Breakout 55, bad follow-through 56, yet the bull trend resumed. This could be the opposite. Bear breakout 25, bad follow-through 26. It may go a little bit above 26, form a low one, and then the bear trend resumes. But I do think it's reasonable to exit shorts above a bull bar closing above its midpoint, even though it's still more likely we're going lower. You had limit order bears who bought the 8 low, and they bought more 5 points lower, betting that it would get back above the 8 low and they could make money. They bought the 8 low right here, hoping it would go up, but confident that if it went down, they could buy more and it would get back at least one tick above the 8 low so they could get out break even on their first buy and with a 5-point profit on their lower buy. And that's the 8 low. The bulls needed to get one tick above that. If they do, that means limit order bulls are making money in a bear trend. That is a sign that the bear trend is not as strong as it could be. But if the 26 high does not get above the 8 low, then it could be a breakout test. It would increase the chances of a measure move down to below the Globex low. So important what takes place here. Are we going to go at least one tick above the 8 low, reducing the chances of a big bear day, increasing the chances of a trend reversal or a trading range, or are we going to stay below the 8 low? It looks like we're going above. For the bulls, it's a possible low of the day. You can always buy, trade small. If it keeps going up, buy more. I think it's probably better to wait to see if we get consecutive bull bars. And for the bears, it's reasonable to exit here above that bar. I just got out of the balance of my short at the market. Inside bar 26, it's a low one, but it's a bull bar and not a very strong breakout. We still have not gone, actually we did, we just went above the, you can't see, but I can see on my other computer that 27 went one tick above the 8 low. And what happens there? Well, you do have bulls buying above 26, but you have other bulls selling at the 8 low. They bought the 8 low, they bought more 5 points lower. It gets back to the 8 low and they sell. So you have bulls selling. You have bears selling above 26, trying to trap the bulls into a bad long. We don't know if there are enough sellers to continue the bear trend, or if the bulls will buy a 50% retracement, a rally up 26, they might buy the midpoint. That confusion makes it less bearish. Also, look at the bars today. We had one big bear bar, and the other bars are pretty average looking size, prominent tails. So we're in a bear trend, but it does not look like a strong bear trend. And if a bear trend is not strong, at some point you typically get a rally for an hour or two. A not strong bear trend tends to evolve into a trading range at some point. Getting near to the Globex low. I did not sell below 26. I'm flat right now. Now the sell the closed bears 25, disappointed 26. It looks like a lot of them are buying back shorts. So a lack of confidence. For the bears, a low one, 26, but a bull bar. So some bulls will buy the 26 low, especially after seeing traders make money buying below 8. Bearish, but not as bearish as the bears want. Micro double bottom, 25, 27. Small wedge, 21, 27. High 2, 8, but a bear bar. One of the problems that all trend traders have, bull and bear, is the two moving averages are flat and next to one another. And that's because the market is sideways, and it increases the chances that the market's going to go more sideways. It's still always in short. You can still be short, but I'm back to flat. I did not want it to go above 26. If I sold below 26, what would I do? I'd get out probably 3 or 4 points above 27. Did not go up enough to get out. But I'm currently flat. The math is just not good enough. It looks bullish for a bar or two. It looks bearish for a bar or two. So that's trading range behavior. Everything is disappointing. The bulls are disappointed that we're not getting a series of bull bars. The bears are disappointed that we're not getting a series of bear bars. Increases the chances that we're going to get a swing up at some point today. The bulls are hoping it's here, but we're so close to the Globex low, we probably have to get to the Globex low. It's possible we could bounce for a few bars. Remember I said that a lot of times in bear trends, the market keeps getting back to the moving average. So we may have to get to the moving average before the bears come back. Moving average, moving average, moving average. Moving average, a little bit above, a little bit above, a little bit above. Moving average, moving average, moving average. So we may have to get to it, maybe a little bit above. But these channels are often difficult to trade with stop orders. Stop orders. A lot of traders trade them like trading ranges that are sloped downward. They sell with limit orders, and they buy new lows, buy more lower with limit orders, and they take quick profits. For the bears, a low 1, 28. For the bulls, a high 2, 29. A second reversal up. It's still more bearish than bullish, and we're still probably going down to the measured move and Globex low. But as I said, we may have to reach the moving average before we go down again. I'm currently flat. Breakout mode, we're still on the sell below whatever, sell below 19, below 20, below 23, below 24, below 28. And magnets below. We should go lower, but right now it's not such an easy short. We may go sideways to up to the moving average. So anybody selling the market, selling below 28, selling below 27, stop at a minimum above 20, above 28. And for the bulls, there's nothing to buy. So you're either short or flat. And both are okay, but the problem is we could go a little bit above the 28 high and then down again. You can see in these examples, some of these examples, we had minor here, reversal down, slightly higher high. So here, slightly higher high, slightly higher high. So that's the trick. If you put a stop just above the high, you often get stopped out, and then the trend resumes down again. But if I were short right now, I would exit above 28 and then look to sell again on the second reversal down. We should go lower. Can today be an outside down day? It's possible, but so far the selling is not very strong. We reversed down from above yesterday's high. It's possible that we get below yesterday's low, which is this red line, but right now, probably not. There's yesterday's low. Probably buyers somewhere around the Globex low and the measured move. Today's Friday, so there's always an increased chance of a surprise. The bears would like the week to close on the low. I think it'll close probably in the middle third. It's going to have a bear body. I don't think we're going to close above the open of the week. So right now we're in a bear trend, and I keep showing these charts because it's probably a bear channel. So lots of reversal attempts, yet continuing to fail at the moving average. Experienced traders will sell bull closes near the moving average. They'll sell with a limit order at the moving average. Most traders should look to sell with a stop below a bear bar around the moving average. And bulls, they'll buy new lows, buy more lower. But in general, in a bear trend, it's better to focus on taking shorts rather than taking longs. It's possible that we get a reversal up at any point. And if we do break strongly above the bear trend line, then you'll get bulls buying and bears will stop selling. You can see the Globex low is coming into view on the left, and that's where we're probably headed. Surprise bar up. For the bulls, it's a bear trend, a bull breakout, and then a higher low major trend reversal, and a high two, you can call it a double bottom. But the big problem is we have two moving averages that are flat and next to one another. That's because the market is sideways, and it increases the chances that we'll remain sideways. One thing that could lead to a trend, especially the final half hour, is it's Friday, and we have magnets above and below. The low of last week, a much more important magnet is the open of the week. But that's probably too far up to get there. That's around the Globex high, so we're probably not going to get to the open of the week. So the bar will have a bear body on the weekly chart. Let me put one other thing up there. This is the high of the week. That's the low of the week. No, this is the high of the week. This is a 60-minute chart. It's pretty common if the market is not going to close at the high or low of the week, that it closes in the middle of the week. And that's the midpoint of the week. And the market obviously has been paying attention to it. We dipped below it many times, reversed up. If a bar closes above its midpoint, even if it has a bear body, a lot of traders still think the bulls won the week. That means it sold off and it reversed up more than half of what the market, more than half of the sell-off. So on balance, you say the bulls won. And it increases the chances of next week being sideways to up. If it closes below the midpoint of the week, the bears won the week. It increases the chances slightly that next week will be sideways to down. And do you think the market's paying attention to the midpoint of the week? You tell me, right? We've been testing it for the past several hours, so the market clearly is aware of it. So what do you do here? Is it buy the close? Well, I typed that. Let me put up my bar numbering is gone. Let me try it again. Let me try changing the time frame and bringing it back. I'm going to turn off the screen for a moment, and I'm going to close the workspace, and I'm going to reopen the workspace and see if the bar numbering is back. The workspace, and I'm going to reopen the workspace and see if the bar numbering is back. Still not back. Let me try adding a different bar numbering indicator. That one's not working either. Let me try adding a third one. I have a bunch of different indicators for doing the bar number. And that one's not working, so something's funny here. If I do the Globex version, something's wrong here, because that's not the Globex prices yet. The bar numbering is there. And if I do the day session, the bar numbering goes away. For the bears, it's a lower high. You can call it a triangle. High, low, higher, lower high, higher, low, lower high. Bears are trying to get down to the Globex low. 90% of days we get there, and we've been just above it. You see, that's gone too. So something's funny here. I'm going to turn off the screen for a moment. And I'm going to close TradeStation and reopen TradeStation. There was an update to TradeStation yesterday, and it makes me wonder if the update has a bug in it. I am reopening TradeStation. I'm going to turn off the screen for a moment, and I'm going to close TradeStation and reopen TradeStation. There was an update to TradeStation yesterday, and it makes me wonder if the update has a bug in it. I am reopening TradeStation. Well, it's still not showing the bar numbering. I'm going to check on my other computer and see if it works. It works on my other computer. So it's possible that I have too many things on this chart. Let me just check if it works on this chart. No, it does not show up on that chart either. Now, I can get the bar numbering on the Globex chart, but I lose all the lines, and that's not the Globex chart. As you can see, it's not the Globex chart, it's the day session chart, but it says the Globex chart here, so something is wrong. Bulls trying to get a higher low. They're hoping 60 is the start of a bull trend from a higher low major trend reversal, and they're hoping 62 is a pullback, a high one, and a bull trend. And the bears are hoping that 61 is a low one and a bear trend. So something is wrong with the data. I'm going to close out this workspace again. And I'm going to go to, there's a data file, a cache file in TradeStation. And sometimes the data gets corrupted. And I'm looking up on my other computer to see where that data file is. And sometimes the data gets corrupted. And I'm looking up on my other computer to see where that data file is. Okay, I found it, so let me, okay, go to hidden files. Okay, go to hidden files. Okay, go to app data, go to local, go to TradeStation Technologies, go to TradeStation, go to 10.0, and tick cache, delete tick cache. It says I have to close TradeStation. Let me try again. I'm deleting the tick cache. I just deleted it. Okay, I'm opening TradeStation again. Whenever I deal with tech support, for example, on corrupt TradeStation data, after they tell me step by step by step, and they quickly solve the problem, I have them go through it very slowly, and I write down all the steps so that I don't have to call them again the next time the problem comes. So I'm reopening the workspace, and let's see if it was just corrupt data. It's still not showing there. And if I go here, it's showing, see, there's something wrong. This is the symbol for the continuation chart Globex, yet this is not Globex, this is the day session. So there's something wrong with the data. Anyway, the bears, a low 2 legs up, 1 pullback 2, you can call it a wedge, 1, 2, 3, a breakout test 52, 52, a bad sell signal bar low. So some bulls buy the 52 low, thinking there are buyers below. They're surprised by 53. They wait for a bull bar closing on or near its high, 55, and they buy more, betting that will go back up to 1 tick above that 52 low. And this high is 1 tick below the 52 low. So the scale and bulls were disappointed that it did not go above the 52 low, and they were unable to get out break even, and they sold during 61. So part of the selling during 61 is from bulls who had limit orders to sell at the 52 close where they bought. They bought the 52 close, they bought more here, they placed a limit order to get out break even. Usually when you have a bad buy signal, a bad sell signal bar, there are buyers below and the market will come back above that low. Here we got right to it, but not above it. So the bulls who bought there, who tried to get out here, were unable to get out, and now they're selling. So it increases the chances that we're going down to the Globex low. Something is wrong with my data, and I did what I thought I had to do to fix it, but that did not fix it. Let me just check if there is also a second tick folder. Well, I'm going to close this out again, and I've got one last thing that I can try. I deleted the tick cache, but I did not delete the cache. And TradeStation created a folder. So I'm going to go to that TradeStation folder, And under Cal, there's a cache. I'm going to rename it. All right, and now I'm going to try to reopen TradeStation again. All right, now let's see what happens. I'm hoping I didn't do something stupid. Opening it up. Okay, that fixed it. So now I got the day session and the numbering is correct. So somehow the data got corrupted. But I also lost what I put in. See, yeah, now it has all the, oh, I have to redo all these stupid lines again. I'm going to put back the midpoint of the week. This is the first day of the week. This is the low of the week. That's the midpoint of the week. Back to a 5-minute chart, midpoint of the week. So 2 legs down, 1 pullback, 2. Bulls again trying to get a reversal up. $15-minute chart and 60-minute chart. I'm going to get rid of that line. Now, 4-hour chart. Okay. Bulls trying to create a reversal, 2 legs down, 1 pullback, 2. And if they get a decent bull bar, if 64 looks like 55, it will attract buyers. But if it looks like 57, it will not. So the bigger the body, the more it closes on its high, the more buyers will buy, and the more likely will go higher. So important how it looks when it closes in about 10 seconds. If it's only a little doji bar, the bears are sold below 61, will exit 2 or 3 points above. Okay, it's closing near its high. It's pretty much the minimum that the bulls want. Whenever you get the minimum, it's usually better to wait. So I'm not going to buy above 64. It's reasonable for bears to get out above 64. We're so close to the Globex low right there that we should get there. That's also that low, but I think that's a less important low. I'll get rid of that. I think the Globex low is more important. You can see we're almost there, so we should get there. It's just below the low of the day. What happens when we're there? Right? That's not what I want. What happens when we're 1 tick below the Globex low? We'll find out, right? The goal was for it to go 1 tick below the Globex low, which it just did. And the bulls are hoping it reverses up. Maybe a wedge, 1, 2, 3. Maybe a high 2, 2 legs down, 1, 2. This is a 15-minute Globex chart. Minute Globex chart. And the bears want the day to go outside down. I talked about that earlier, that yesterday's low might be too far below for today to get there. I'm going to put a line in for yesterday's low. We traded above yesterday's high. I'm going to put a line in for yesterday's high as. Remember when I deleted the cash pile, I deleted a lot of the drawing also. Yesterday's high, yesterday's low. We were above yesterday's high, reversed down, and the bears hope to get below yesterday's low. We have an hour to go, and it's 20 points, 25 points. Given how little movement we've had over the past several hours, I think we're probably not going to be able to get down to the low of yesterday. So today will probably not be an outside down day. Look at, I have different support and resistance drawn on the chart. And which one is the one that the market has paid most attention to? Obviously the midpoint of the week. So that might be important right until the end of the day. So we may continue to oscillate around it. Possibly expanding triangle, 1, 2, 3, 4, 5. Bears are hoping this is going to continue down, but it probably will not. Not much energy all day, right from the open. I said the first doji bar and then other doji bars, I said it increased the chances of a lot of trading range trading today. For the bulls, 66, if it's a bull inside bar closing near its high, it's a reasonable buy for a failed breakout below the low of the day and below the Globex low. For the bears, we're still on the short below 61, and they're hoping that we go down to below yesterday's low, but I think it's probably too far. The bars are not big enough. We have too many overlapping bars. The bears are hoping the character of the day is changing and becoming more bearish here. But big bear bar 63, bull doji 64, big bear body 65, big tail. So it's not as bearish as it could be, and probably not bearish enough to get down to the Globex low. The whole thing could be a wedge, 8, 38, 65, trading range day. So I'm always looking for reversals when the market goes above something or below something, and we're below something here. Different ways to look at it as a wedge, 1, 2, 3, and 1, 2, 3. But the bulls need a buy signal bar, 66. Bulls buying about 66, it's a swing. For the bears, 66 is a pullback in a bear trend. They want the day to get down below yesterday's low. So for them, it's a low one sell signal, but it's not going to attract many sellers if it has a bull body. For the bulls, it's a failed breakout low of the day, a lower low major trend reversal, expanding triangle, 32, 38, wedge, different ways to draw it, 45, 55, wedge, 8, 38, but most bulls are not going to buy unless it closes around its high. Otherwise, it's still on the short. So you can see it's a doji bar, a bull body, but most bulls are not going to be buying above 66 because big tail on top, and most bears are not going to be selling below 66 because of the bull body. We're still on the sell below 61, and we still have the magnet below. So you can take the sell and take a chance that we get down there, but not great math. I mean, it is good math. You sell below 66 to stop above 66, so you risk about 5 points, and you're trying to make 20 points. So the math is, the risk reward is good, but the probability is not. There might be more buyers than sellers below 66. You can see low 1, but more buyers than sellers below 66. And for the bulls, expanding triangle, wedge, only a bull doji. So that's not going to attract a lot of buyers. Bears, I'd get out above 66 or a couple points above 66. And bulls, some will buy above 66, some will buy above 67. Some will wait for a bigger bull bar closing near its high. There's plenty of reason for it to go up. Bottom of a trading range day, different kinds of wedges, failed breakout below the Globex low, failed breakout below the midpoint of the week. But most bulls are only going to buy if there's a pretty good buy signal bar. I'm going to turn the screen off for a moment. I saved that cache file. I renamed it, and since TradeStation is working, I can now delete the bad one. And I'm also going to that app data thing. I forgot if I renamed TradeStation the tick file. Because today is mostly sideways, it's in a bear channel, but a lot of bars that are sideways here and here just all day long, prominent tails and reversing every few bars. At the end of the day, you say, oh, Al, it's simple. You sell below 4 and you just hold short all day and you make 50 points. But it's not that simple because we keep getting incredible buys. So what happens is bulls buy above the bull bars, they sell below the bear bars when there are rallies, and they just keep taking lots of little trades. And sometimes it's really hard. You know, if you bought above 55, do you get out below 56? No, the stop is below 55. And do you sell below 56? I would not. It just went long 55. But if you did sell below 56, you get out above 56. So you get a lot of these little reversals, and it's hard to know. You cannot be as certain as you want to be. You know, do I get in? Do I get out? You know, where's my stop? How much do I want to risk? Do I use wide stops and scale in? On a day like this, where you have a lot of trading range trading, it's a really good day for limit order traders buying below things, using wide stops and scaling in. All right, this is a perfect day for that. The more a day is sideways, the more money limit order scalpers make. The more the day is trending strongly, the more stop order traders make on swing trades. So bear channel, but really just a lot of sideways trading. You know, no sustained selling. We keep getting interruptions. A couple of bear bars, 35, 36, and then a bull bar, and then another bull bar. I used to get upset, 35 years ago by stuff like this. And you say, why is it doing that? I'm trying really hard to make a living as a trader, and it keeps reversing on me. And that's just the nature of markets. Sometimes it's going to do something, sometimes it's going to do something else. It's never going to always do the same thing, because a market requires somebody to take the opposite of the trade, opposite side of the trade. And if it's always doing one thing, always going one way, nobody's going to take the opposite side. And therefore the market cannot continue to go that way. And that's what happens. It gets, it oscillates in every way. Small bars, big bars, strong trends, weak trends. And once all the computers start doing the same thing, if it's been sideways for a day, 2, 3 days, all the computer algorithms, they start switching to trading range trading. Then there's not enough traders taking the opposite side, and you start getting breakouts with no reversals, and it becomes a trend. And then once it's clearly trending, the algorithms all start trading trend algorithms. The computers all start trading trending algorithms. And once there are too many trading trending algorithms, there's not enough traders, institutions taking the opposite side, and that no longer works. So it just keeps fluctuating back and forth. Also, the market is constantly evaluating countless variables. And you get the ones that are obvious, what the Fed is doing, and then data, employment data, inflation data, and then you get a whole bunch of ones that are not so obvious. Some are hard to calculate, like the earnings report from every company in the world, every news release by every company in the world. All of that affects the price of the overall market. Some of it has very little effect, but if it's a major stock like Apple or Google, and they make a major announcement, it's going to affect the overall market. Traders look at those as leaders, and leaders mean there are followers. You know, if you look behind yourself and there's nobody there, you're not a leader. Apple, everybody's following Apple. Everybody's following Google. Also, a lot of companies depend on those, especially Apple. You know, Apple doesn't make all the parts that go into its computers and into its cell phones. Right? They buy all the parts, and all the companies that make those parts, their well-being depends a lot on Apple. So if there's something wrong with Apple, then all of those companies supplying Apple have problems. So it affects more than just Apple. Getting close to yesterday's low right here. Now I got to fix those lines on all these other charts as well. I'm guessing the data got corrupted because I have so many lines and so many charts. That the data is probably whatever file system they have. I don't know how they structure their how TradeStation structures their files, but I'm sure everything is old and outdated and probably has limits in it. So and all my lines might be more than what their limits can handle. This is a weekly chart. If you draw a line across the tops of the bars and create a parallel and drag it here, you create a channel, and the market is getting near that channel. It's still sell for any reason, but not falling quickly. We're not getting a series of bear bars closing near their lows. It reduces the number of traders willing to sell the market and sell with a stop below the bar. Reasonable to get out 2 to 3 points above any bar, including a bear bar 68. And for the bulls, they need to get a good-looking buy signal bar. Kind of like drip, drip, drip. You know, you're trying to fill up a gallon bucket and you're just getting one drip at a time. It might accelerate here, so you know, it is okay to be short, but I would get out pretty quickly if it starts to reverse up. Get out a couple points above the bear bar, 1 tick above a bull bar, closing above its midpoint. Whenever you have a market slowly moving toward an important price, and you're late in the day, late in the week, and you think, I can't get there. The market's going in that direction because the institutions believe it can get there. This is 20 points away, yesterday's low, but it's still within reach. Let me see what that blue line is. Well, that's that January 24th low. It's still sell for any reason, right? Use a tight stop. I talked about that climactic bar on the Globex chart right here. And when you get a big bar like that, I would say half the time it leads to a measured move. And 60 or 70% of the time, the measured move is up. But maybe 30% of the time, 40% of the time, the measured move is down. So that is another possible target. We're already more than a measured move down based upon the height of that body, which is just below the Globex low. What about based upon the height of the bar? That is probably too far down to get there today. Right now, I think the market is deciding on yesterday's low. Here, can today be an outside down day? And if the bulls continue to fail to get a reasonably good reversal up, then chances are we're going to gradually work our way down to yesterday's low. I refer to this as a double top, 53.28. And when I'm looking for a measured move based on a double top, I always use the lower of the two prices first, and if it goes below that measured move, then I look at the higher. So that measured move is right below the January 24th low. And if it falls below that measured move, then I would look at a measured move based upon the higher of the two highs in the double top. And that gets us right to around yesterday's low. Who's going to buy above 70? Well, since 60, so this is 10 bars, every high has been at or below the high of the prior bar. So a 10 bar bear micro channel. And different ways to look at it as a wedge, but a 10 bar bear micro channel will reduce the number of bulls buying the first reversal up. For 10 bars, bears have been willing to sell below the high of the prior bar. And therefore, a lot of bears will be happy to finally get an opportunity to sell at or above the high of the prior bar. So it increases the chances that the first reversal up will be minor. Bears, if you're short, you can get out a couple points above a bear bar. You can get out one tick above a bull bar, 70. And the bulls, it's still a lower low major trend reversal, a spike and channel down, spike, pullback, channel, spike, pullback, channel, and it's a big wedge. But the 10 bar bull, the 10 bar bear micro channel, and the tail on the top of 70, I think will reduce the number of bulls willing to take that buy. A lot of bulls will wait for 2 or 3 bull bars, or they'll wait for it to go sideways for a few bars, like 36, 37, 38, 39, and then look to buy. For the bears, it's a low one, but it's similar to 37, a pullback at the low of the day and a bull bar. And most traders, unless the day is a reasonably strong trend day, today is not. Unless the day is a reasonably strong trend day, traders do not like to sell at the low, and they do not like to sell below bull bars at the low. Reasonable to exit shorts above 70, even though it's a possible low of the day. I think it's better not to take the buy, wait to see if it goes sideways and get micro over bottom, or wait to see if we get a bull surprise breaking above the moving average, or wait to see if we get 2 or 3 bull bars closing near their highs. Probably more sellers than buyers above 70 and at the moving average. Possible double top 66. The market often tries to reverse around bar 18, which we did. It often tries to reverse in the middle of the day, around 40 or 41. Today we reversed at 38. And it often tries to reverse around 12:30, 12:35. Sometimes you get reversals at 11 o'clock, 12 o'clock. Low 170, a bull bar, and 3 bar tight trading range. And for the bulls, not a good enough bottom. The bars are small, and 4 overlapping bars here, 4 overlapping bars here. I'm not sure that we're going to be able to get to yesterday's low, but that's why the market's going down, trying to become an outside down day on the daily chart. Low 171, but no scalp. Bottom of a 4 bar tight trading range. Really, most traders, this is not good trading. It would be a better short below 71 if it was at or near the moving average, like 61. But below the moving average, traders are hesitant selling too low because the trend is not very strong. So you'll have fewer traders selling below 71. If there are fewer traders selling, can you buy with a limit order 71? I think you should not be buying below a bear bar closing near its low in a bear trend. It's a low probability bet. So you either sell at the market or below 71 or below 69, or you wait. And waiting is probably the best choice for most traders. Remember I said it can accelerate down, and it looks like that's what it's doing. Magnet, January 24th low, and also yesterday's low. You can see accelerating down to the magnets below. What happens if we break below yesterday's low? Well, it looks like we're going to. Usually, if you, 2 things about it. Usually, if you're getting a break below yesterday's low late in the day, there's not much time for it to get much below yesterday's low. And the other point I wanted to make is it's fairly common for the size of the break below yesterday's low to be about the same size as the break above yesterday's high. So, that would be one measure, maybe 20 points, which would get us down here. You can see more traders are willing to sell now that it's accelerating down to the targets. Consecutive pretty good bear bar is 72.73. The bulls are hoping it's a climactic sell-off and that we're going to reverse up. And the bears are betting it's a bear surprise and that we're going to continue down to yesterday's low. And the bear case is more likely, but as I said, I would get out above a bull bar. So if 74 is a bull bar, I'd get out above. I'd get out a point or two above a bear bar, 73. We're breaking below a bear channel, different ways to draw it. And breakouts below bear channels usually reverse, not necessarily right away, but they usually reverse. We have two important magnets. That January 24th low was that major bottom over here. This is the daily chart. And you can see today we're right at that low. When we were below it here, they bought aggressively. When we were below it here, they bought, but not so aggressively. And we're testing it again. Because of the lack of a strong reversal up this week, I think we're probably going to fall below the February 22nd low. At this point, I thought we would not, but we went down, and if we were going to continue up, we should have snapped back up quickly. And we went down, and we're staying down, and we're not getting the abrupt reversal up. That increases the chances that we're going to go below this low. A low one, but a bull bar. We've had several like that today. Also, we're very near two important magnets, the January 24th low and yesterday's low. And then that bar rallied, 8 points or so. That will further make bears hesitant. The 4,200 big round number is a magnet. All the big round numbers are always magnets. Sell the closed bears 73, disappointed 74. Some of them may decide to buy back shorts around break even, 75. If enough bears buy back shorts, we get a micro double bottom, 73, 75. But bulls want a good buy signal bar before they buy. They want a bull bar closing on its high with a decent sized body. Buying in a tight bear channel is low probability. If you get a strong buy signal bar, the probability is a little bit better. The bigger the body, the more 75 closes on its high, the more bears will give up above 75, and the more bulls will buy, taking a chance it's an exhaustive end of the selling and that we will not get below yesterday's low. It's pretty common for a market to reverse down from above yesterday's high and sell off strongly to yesterday's low. And right before it gets to yesterday's low, reverse up sharply. So it's an almost outside down day. And sometimes the sell-offs can be strong, even much stronger than today, and still reverses up sharply. Almost outside down. Yesterday's high, we were above it, reversed down. We sold off strongly, and right above yesterday's low, we reversed up. Huge sell-off, could not get below yesterday's low, and reversed up. Big collapse, much stronger sell-off than today, but a bull bar closing near its high. The bears gave up. They no longer were willing to try to get it to be outside down, try to get below yesterday's low. And sometimes it can be late in the day. Well, this is almost outside down. Well, almost a break below yesterday's low, and then reversed up and went far above yesterday's high. Middle of the day, big sell-off, and then a bull bar closing near its high right above yesterday's low. Late in the day, like today, right near yesterday's low, unable, and reversed up. Late in the day, exactly reached yesterday's low and reversed up. But in all of these instances, you get a big bull bar closing near its high. Here we did go, well, we were below yesterday's low, above yesterday's high, and then back below yesterday's low a second time. Late in the day, unable to get below yesterday's low. Late in the day, bull bar closing near its high. It's a buy. Here it did not go up very much, but it's a small pullback bear trend. You'd expect a reversal to be minor. Bulls need a bull bar closing near its high. Otherwise, we will go below yesterday's low. Upside down, above yesterday's high, and then below yesterday's low. Above yesterday's high, below yesterday's low. If it occurs early in the day and yesterday's range is not very big, you sometimes get a measured move down. Late in the day, outside down, did not go much below yesterday's low. Late in the day, a little bit below. That's what I expect today. We're running out of time, so if we do go outside down, we're probably not going to collapse and close far below. Right at the end of the day. End of the day, upside down, a little bit of a bounce. Late in the day, it stopped trending. It went sideways after it went upside down. Late in the day, a few bars down, a few bars up. So late in the day, just a little bit below. So since the majority of the examples that I showed where the market goes outside down at the end of the day, it does not go far down. It does not trend down. It goes below and stalls. If we go below yesterday's low today, it probably will not go far down. The computers might have limit orders to buy at yesterday's low and 5 points below, 10 points below, or buy 5 points below, 10 points below, betting will bounce back above yesterday's low. Below yesterday's low, if you bought with the limit order, you made money. Below yesterday's low, if you bought the low and bought more lower, you made money. We went back up to yesterday's low. A little bit above yesterday's low. So the scale and bulls made money. Bought below yesterday's low, bought more lower. Here we did not go back above. So the bulls who tried to get out, break even, unable. Some of them bought yesterday's low a little bit lower, and they were able to get out here. Below yesterday's low, a little bit of a bounce. So right now it looks like we're probably going to go below yesterday's low, but probably not far below. And small chance it could be one of those almost upside down days that reverses up sharply, target above the midpoint of the week. Bulls want a bull bar closing near its high for a buy, trying to get one last trade. And the bears, they're selling for any reason, at a minimum, trying to get below yesterday's low. Bulls trying to get an almost upside down day. But unless 77 closes on its high and has a decent sized body, it's not worth buying it. The body is good size right here, but I think the bulls need it to close on its high. Otherwise, not many people are going to buy it. A little doji, a bull bar closing on its high, a bigger bar, almost upside down. Big bull bar closing on its high. Big bull bar closing on its high. Big bull bar closing on its high. Good sized bull bar closing on its high. We're probably not going to go far up or down from here. The market's simply debating whether or not it will go upside down. The bears will get out above any bull bar, especially a bull bar closing near its high, and bull scalpers, some will buy above 77, but we're getting late in the day. And that creates the problem of how much profit can you make if you only have a few bars left and you're buying in a tight channel. Management becomes tricky because it may just go up for 1 bar, 5 points or so, and then sideways or back down. Upside down, above yesterday's high, reverse back down, and below yesterday's low, and below the 4,200 big round number. I talked about a measured move based upon this double top, and we're at a measured move target, so a double top here and there. Double top air flag, break below the neckline, and get down to the measured move. Institutions dumping into the end of the day and the end of the week increases the chances of lower prices on Monday. Daily chart upside down, and a lot of good-sized bear bars closing near their lows here, erasing the bullishness of that and that. As I said, the bulls had a very strong reversal up here and again here. And at this point, it was likely more than 50-50 that we were going to sell off and sharply reverse up from a higher low. Well, we sold off, but did not sharply reverse up. So now it's more likely that we'll break below this low. If we go below for a day or two and reverse up, then we get a big wedge. If we go below, we'll probably test 4,000, and we might test that gap on the monthly chart from last year. Over here is a gap, small gap, high of March, the low of April. Let me just see if it's still there. Yep, doesn't look like it, but there's a gap. This is the last day of April, last day of March, and that's the first day of April. There's an obvious gap there, but there's actually a gap below this low and above that high, the beginning of April, end of March, and it's right below 4,000. And that's the next target. If we break below the February low, which it looks like we will, so the 4,000 area and that gap. Bulls tried to get a wedge, 1, 2, 3, but it looks like they're failing. Next, they'll try to get a wedge, 1, 2, and then 3. What about Russia using chemicals? I don't think they'll use germ warfare. One of the reasons why nobody uses germ warfare, and it was one of the reasons why it was stupid for people to say China was developing COVID as germ warfare, is once you release it, it's going to go all over the place, including back in your country. You know, you can't release some kind of killer germ and thousands of miles away and believe and conclude you're safe. So only an idiot would use germ warfare, because it'll spread back to your own population. And if it's a good enough germ to kill off the bad guys, your enemies, it's a good enough germ to kill all of your people as well. And you can say, well, aha, we have a special treatment for the germ if it's in our population. No, you don't. If you have the treatment, the other guys have the treatment also. So nobody's ever going to use germ warfare. Chemical warfare, the Russians and the Syrians did it in Syria, And that I expect at some point Putin is going to continue to do things to annoy the West. So invading Ukraine, annoy the West. And Putin's decided that there are not many sanctions remaining. There's not much more the West can do. And therefore, there's no downside in doing things to annoy the West. So invade Ukraine and use chemical weapons and say that one of their bombs hit a Ukrainian facility that was making chemical weapons, and the chemicals that the Ukrainians made were released. So Russia will deny it. Tactical nuclear weapons, tactical meaning not the kind that go intercontinental and blow up another country. Tactical means on the battlefield, a smaller nuclear weapon. Everybody knows Putin cannot send an intercontinental ballistic missile to Washington and blow up Washington, because that would be the end of Russia. So he's not going to do that. But he might use tactical nuclear weapons to blow up cities or large areas of Ukrainian troops, basically daring the West to do the same. And the reason the West cannot do the same is Ukraine no longer has nuclear weapons. It had the third biggest stockpile of nuclear weapons until the end of the Soviet Union, and Ukraine gave up all of its weapons to Russia. And if Ukraine held those weapons, Russia would not be invading Ukraine right now. But if the Ukrainians use nuclear weapons, Russia would correctly conclude that the United States gave the nuclear weapons to the Ukraine, and therefore the United States is involved in the fight, and the fight could spiral out of control. So I think Russia, there's a decent chance they will. If the war goes on long enough, I could see them using tactical nuclear weapons and then telling the United States, "There, I dare you to return." All right, and they know the United States will not. So Putin has some liberty to do outrageous things and claim that he's powerful and that he's intimidating the West, and the West cannot do anything to stop him. So that's why I think he will use chemical, and I would not be at all surprised if he uses tactical nuclear weapons as well 6 months down the line. But anyway, that's not good for the stock market. The more the war goes on, the more depressed people get, the less enthusiastic they get about buying stocks. Also, the more inflation, if world traffic is slowed down at all, either by a lack of oil or by a fear of being attacked by Russian surrogates, the economy slows down. And if the economy slows down, companies make less profits. If companies make less profits, you really want to pay as much as the current price is for those companies. So it pressures stock prices. Remember, I've been saying for several years that the stock market is going to enter a trading range, and it will last about a decade, and nobody knows when the trading range will begin. As of today, I still think we'll get one more new high, or at least one more new high on the monthly chart before the trading range begins. But the trading range might have begun. And sometimes, even when the market's in a trading range, you get a new high. I'll put up that monthly cash index chart again. Okay, look at this. When you look at that, you quickly say, "Oh, that's a trading range." It is, but this high went above that high. So in a trading range, and that high went above that high. And then if you go back to the 70s, 60s and 70s, right? Where did the trading range begin? You can say, "Well, it began at the end of the bull trend, so it began here." No, it didn't. Most people would say the trading range began back over here, and we had a new high, a new low, another new high, another new low, expanding triangle. And I would say the trading range was from here to here. So even if you get a strong sell-off, you can get a new high and then another new high. And this first high could be part of the trading range, even though it's not the final high. So here's the final high, but the trading range did not begin here. The trading range began over here. So you can still get new highs after a trading range begins. So it's possible that we're in the early stages of a trading range here. And I keep saying we'll probably get a new high. But if we do get a new high and it does not go up all that far, and then we come back down again, the trading range would have begun somewhere in here. You can see the huge volume that takes place at 1 o'clock, bar 78. Daily chart, the bears, it's in a bear channel. We're getting lower lows, we're getting lower highs, we're getting strong rallies, but we're still getting lower highs and lows, so we're still in a bear channel. We've had 2 exceptionally strong rallies, and usually if you get 2 like that, you're going to get a second leg up. But the sell-off, I think, is bad enough so that it's more likely we're going to go below this low before we go above that high. With the war, anything can happen. You know, peace could break out, and then all of a sudden, this is the low for the rest of the year. That's unlikely. And then the Fed next week, FOMC on Wednesday, they're going to say something, and the market is going to move based on what they say. I've always said that Chairman Powell is not all that bright and not all that strong. And he's not as bad as I thought, but I think he's not as good as past Fed chairs. And I think I don't trust his decision making. And I'm an eye surgeon. You know, what do I know, right? But if I'm getting a sense that something is wrong, I bet a whole bunch of economists have the same sense that something is wrong. And so I think there's less trust in Powell's judgment than there was in the judgment of all the past Fed chairs. You know, Powell is not carved out of granite, right? He's silly putty, and people just don't trust him. And because of that, there's an increased risk of a big move after the FOMC is released on Wednesday at 11. It could be in either direction. Everybody knows he's going to say we're raising interest rates 0.25%, and we'll make further rate increases depending on facts as they become evident. Everybody knows that's what he's going to say. But he may say it in a way that makes it sound like he's probably not going to raise interest rates for 6 months. And if he says that, the institutions are all going to say the guy's an idiot. We have an idiot in charge of the economy, and the market will sell off. Or he might say, we're going to raise rates 0.5% now, and then 0.25% for the next 5 meetings, unless there's some dramatic change in the economy. And if he does that, people will say, well, that's not in character, something's crazy going on, and they don't trust him, and the market will sell off. So I don't see anything good coming from next Wednesday's FOMC meeting. I don't think, I don't have a lot of confidence that Powell is going to do something brilliant. I think he's going to be disappointing. So I think if we do get a big move after the FOMC meeting, I think down is more likely. And then we also have the downward pressure because of inflation and the downward pressure because of the uncertainty regarding the war. So I do think we're going below this low before we go above that high. But as I said, I think we'll only go down for a few months. We could. That does not mean we go down for a few months and then back up. That means we go down for a few months and then stop going down. So we could simply go sideways for several months or all year. On the open today, I want to say something about the weekly chart. On the weekly chart, we had a high 2 buy, high 1, high 2, pull back to the new high. But the body on the buy signal bar was not all that big, and then the entry bar was only a doji. That's not good. There should have been buyers below last week's low, and there were until today, and today they gave up and sold. And for the bears, this is the start of a bear trend, a small pullback, small pullback. This is a low one sell, and they're hoping that we just keep working lower in a series of low 1 and low 2 bear flags. When I look at the weekly chart, this should have been buyers below last week's low. So this should not have been a bear bar closing below its midpoint. And because it is, there probably were slightly more sellers than buyers below last week's low. And that increases the chances that will go lower next week. Obviously, if next week is a big bull bar closing near its high, then we are going to get the reversal and not get below this low. Remember, on the daily chart, the bulls want a higher low major trend reversal. So bear trend, strong minor reversal, they want a higher low reversal. And it's possible we could get it. It's possible some news in Ukraine could be bullish. It's possible Powell will surprise everybody and say something that reassures everybody and makes people trust him more than they trust him now. But looking at this daily chart, these 2 weeks are bad for the bulls, and they increase the chances that we're going lower. We had a weak rally yesterday. We broke above yesterday's high, but reversed down, possible wedge, 1, 2, 3. Some traders sold below 2, stop above 2. We had a high 1, bar 3, a bull bar, but only a doji after a bear bar. And nobody wants to pay above an average price for bars that are not much above average. So nobody bought above 3. And then the bears, they reversed down above yesterday's high a second time below 4. If you're going to sell, I'd rather sell below a bear bar, especially a bear bar closing near its low. So the sell is below 5. And then 6, we have consecutive bear bars where one of them is relatively big and closed near its low. It doesn't matter if it's the first or the second bar. So 6 is sell to close, and you can see as soon as 6 closes, trade is sold. Bear surprise 7, a 2-bar, bear surprise 7, 8, probably at least a small second leg down. And we got it. 11 is the second leg down, 13 is the third leg down. And we were trying to hold in this trading range from yesterday and at the 60-minute moving average. And we got a reversal up 14, possible low of the day, but probably a minor reversal. We have a lot of trading range bars with big tails, small bodies, and we're getting a lot of reversals. So you can buy above 14 and hope that we rally strongly. The entry bar 15 is only a doji, and that's not good. So that's disappointing for the bulls. We still might get a second leg up. So I would not short below 15. You could wedge 9, 12, 15, but only a doji and a bull surprise 14. I think we'll get at least a small second leg up. And that's what we've got, a small second leg up, 18. The market often tries to reverse at 18. The 18 high is at the 3 low. So it looks like the scale and bulls have bought the 3 low and scaled in more above a bull bar closing near its high 14. It looks like they get out on 18 and 19. Fairly tight channel, 14, 15, 16, 17, 18. Probably a minor reversal and more trading range, but it's a lower high major trend reversal. Bull trend, strong, minor reversal, and now an attempt at a resumption of the bull trend, and now a second reversal. So it's not yet a high probability sell, but it's a credible sell. Consecutive bear bars, 20, 19, 20. Not all that big, but good for the bears. And then 21. I said now we have 2 consecutive bear bars closing below the moving average with one body. 21, completely below the moving average. We'll probably get at least a small second leg down. So it's sell to close, sell for any reason. 22, a double bottom, higher low, double bottom, 13. But tail, 3 bear bars should be sellers above. 21, a low 1 and a bear trend. A head and shoulders top bear flag, left shoulder, head, right shoulder, but a bull bar, 2 bull bars. Not a very good stop entry sell. Might be buyers below 23, below 21, and below 8 at the 60-minute moving average. But right now we're always in short, 21, and we may break below the trading range and fall for a measured move. Low 123, possibly buyers below. I'd rather sell below a bear bar closing near its low of 24, but we're right above the 60-minute moving average, support, and yesterday's trading range. So I'm not confident that this is a very strong sell. Pair of Decent bear bars, 24, 25. Strong enough bear surprise for at least a small second leg, sideways to down. The bulls want a reversal up, a high 2, 2 legs down, 8 and 26 or 27. 26, the bull bar closing near its high. High 2, 8, double bottom, 71. Possible low of the day, but two good-looking bear bars, 24, 25. You could take the buy, but I would rather wait to see if we get consecutive bull bars or second entry. A bear surprise, we should get a second leg sideways to down. 26 is a pullback in a bear trend, 24, 25, and it's a low one sell, but it's a pretty good-looking bull bar, so there might be more buyers than sellers below 26. I don't want to buy below 26. I don't want to sell above. I don't want to buy above 26. I don't want to sell below 26. So there are probably sellers above and buyers below. 27, that's what there were. 27 went above and below. I don't remember which it did first, but that's what it did. Now the bears have their second leg down, 25. 27 went down, went up. And the bulls are hoping this is a micro double bottom, 25, 27, high 2, 8 at the 60-minute moving average and the midpoint of the week. But it has a bear body and we're pretty close to the moving average. So I'm not buying above 27. Bears, they can get out above a bull bar 26. They can get out 2 or 3 points above any bar. 28, it's a micro double top, 26, 28, but 2 dojis in a tight trading range. That's not going to attract a lot of sellers. They're probably buyers at the 28 low, at the 27 low, scaling in lower. Doji bars, not good for stop order traders. The bulls, micro wedge 31 with 25, 27, but a bear doji and the past 5 bars, no good bull bar. So I'm not buying above 31. We're in a bear channel, but it's not very strong. It's more of a tight trading range, more of a limit order market. Buyers below everything, 26, 28, 30, 27, and sellers above everything. So probably sellers not far above. Maybe we'll get a double top 28. Okay, outside down again, 32, a lower high double top 28, but not quite at the moving average. So I'm not confident we're going a lot lower. You know, all these big bear bars, I think more traders are buying the close than selling. And the big bull bars, they're selling the close rather than buying. So it's still a limit order market. There. Now we got micro edge 27, 31, and 32, but a bad buy signal bar 33. 34, a good looking bull bar, but what did I say? It's a trading range day, a limit order market, and we're right at the moving average. So every time there's a big bull bar, right, closing right below the moving average, and you might be in a bear channel, traders are going to sell. I like to sell. Just sell the market, put a stop 5 points above or something like that. But probably more traders selling the close of 34 than buying the close or buying above, betting on double top 28 at the moving average. Bear bar 35, double top, bear flag 28, bear bar closing near its low. This is one that I would sell. I think it's a reasonable sell. It's possible that we'll accelerate down below all of this, but probably buyers below 32, maybe a wedge 27, 32. So, but it's a reasonable short. If it doesn't fall quickly, then get out. Good bar for the bears, closed at a new low of the day. Consecutive bear bars probably going at least a little lower. Bad follow through 37, wedge 27, 32. If I'm short, which I was, I'd get out above a bull bar 37. I can always buy again, always sell again later. And for the bears, even though 37 is slightly below, I think it's slightly below 36. I can't see. This is a 13-inch laptop. It's still a pullback, so theoretically, it's a low one sell below 37. But I'm not selling at the bottom of this channel. It's more a tight trading range that's sloped down a little. I don't want to sell at the bottom. I don't want to buy at the bottom. Actually, I don't want to do it either. Don't want to sell or buy. Bears break out 38, but a smaller bar, fairly conspicuous tail. We're in a bear channel, but it's not falling all that quickly. The bars are not all that big. We're getting bad follow through 37. Possible wedge now 27, 32, 38. Possible buy the close again. So I'm not selling at the low. If anything, I'm buying or look for a reversal up. 39, a 2-bar reversal. Micro double bottom. 36, 38. Bull bar closing near its high. Possible low of the day, a wedge, 1, 2, 3. We keep trying to break below the midpoint of the week. I think you could buy above 38 and hope that it goes up quickly. If it does not, you can get out. Okay, for the bulls, a terrible entry bar, 40. I would get out of longs. I personally would get out of longs below 40 because it's a double top bear flag, 37, and a small pullback bear trend. So I would get out below. If it keeps going up, you can always buy again. And the sell did not trigger. Now we have a bull inside bar for a high 1. So good for the bulls, but they have to break strongly above the moving average. This is the first reversal up on a tight channel, probably minor. But if it starts to accelerate up, it could be the low of the day and the start of a bull trend. Okay, 3 bull bars outside up, 13, but small. The bars are not very big. We may form a double top 35 or double top 28. So yeah, we're probably always in long, but unless the bars start to get bigger, I think it's not going to attract a lot of buyers. Bears double top 35, a bear bar closing near its low. Micro wedge up on 40, down on 40, up on 42, down on 42, and now bear bar 44. You could sell it, but it's a tight channel. I would wait. You can get out of longs below it. You can always buy again if we get a bull bar soon. For the bears, a weak entry bar. But if we get one more bear bar, especially a bigger bear bar closing near its low, it could become sell to close. We have a double top 35, 44. 40% chance we'll break below 38 and fall for about a measured move down. And then instead of going below 45, we went above it. A bull bar closing near its high, good for the bulls, but a bad high 1 buy signal bar, 45. 2 moving averages together and flat, a sign that the market's sideways, increasing the chances that we go more sideways. And we still need to break strongly above 28, the top of this trading range. And without that, you got to bet we're going to reverse down. 47, good bull bar closing near its high, probably by the close, breaking above the top of the range, 28. But what do you notice? When you look at 47, are you nervous? Of course you are. You want a bar that looks like 52 yesterday. You don't want a little breakout. You want a breakout far above. You want people desperate to buy and driving the high far above. Instead, we're barely above, and it makes you wonder, is the breakout simply a test of the top of the range, 28, or is it really going to be successful? Right now, it's buy the close, but I don't want to buy the closes. The bars are too small. I'll wait to see if we break strongly to the upside and then buy. Top of a trading range, 26, probably as many bears selling the close as bulls buying the close. 48 double top, 28, but only a doji and a tight bull channel. Small pullback bull trend, 38. I'm not selling below 48. 49, a high 1, but a bear bar. Probably sellers not far above. This is not a strong trend. 3 bear bars. Traders might start to sell below bars, but we may still be in a small pullback bull trend, and this could be a breakout test, 44, for a measured move up. 51, a high 1, credible buy, reasonable buy. 52, a bull bar closing on its high and above 28, but the bars are not big, and the bulls always need follow through, otherwise it becomes a wedge rally to a double top, 44, 48, 52, double top, 28. And we suddenly got a very big bear bar closing on its low. If you were quick and you understood that it could be a wedge rally to a double top, you could sell as it formed. Big bear bar closing on its low. The bulls want double bottom 45. And some bulls will buy the close, buy more, 5 points lower, buy more, 10 points lower, betting that it's just a bear trap in a trading range. But we got a double top, we're in a bear trend, we have a wedge rally. We'll probably get at least a small second leg down. So you could buy the close, use a wide stop, and scale in. You could sell the close, use a stop above 53, and scale in. Consecutive bear bars, pretty good for the bears, but we're right near the bottom of the range, 38. So it's not great to sell the close unless you're putting a stop above 53. 54, higher or low major trend reversal. But when you see 53, isn't that a surprise? Sure. And therefore we should get a second leg sideways to down. You can get out of shorts above 55, but I would not get long. Low 156, but now we're on the buy 55. We may go sideways and get a double top and a double bottom. So I'm not going to do anything here. For the bulls, 57, a double bottom, a high 2, but only a doji right below the moving average. I'm not buying it. Outside down, 58, double top, 55. You could sell, but you could also say that the bulls are still long. 55, stop below 55. So I don't know. You could sell below 58. I'm not going to. I want to see the breakout below 55. And then 59. Now we have a double bottom, higher low. It's a higher low major trend reversal. It's a credible buy above 59. But the bulls need a strong breakout above the moving average. 52, a bad sell signal bar, yet we went down. Some bulls had limit orders to buy that low, and they'll buy more above a bull bar, 55 or 59, betting that we'll get back to that 52 low. They could get out break even on their first buy, and then with a profit on the buy down here. Bull surprise 60, but right at the 60, right at the 52 low. I don't think we went above it, and that's bad for the bulls. That means there are a whole bunch of bulls with limit orders to buy back, to sell out of longs at that 52 low, and that's not good. The bears are hoping it's a bull trap and that it's sell the close. This is interesting. You could sell the close and put a stop above 53, betting that we'll get another lower high. And for the bulls, it's breaking above the moving average, but did not get above that 52 low, so that's a problem. The bulls are not as strong as they could be, so I'm not willing to buy the close. I want to see follow through. And we got a bear bar closing near its low. So for the bears, it's a low 256. It's a breakout test, 52 low, and it's a wedge, 55, 58. I'd get out of longs, and if you want, you could sell and take a chance that we'll get another lower high. 63, decent bear bar. Does it sell the close? I don't know. We're at the bottom of a trading range, but the higher low major trend reversal, 55, 59 is not working. If we get below 55, probably a lot of bulls will give up, so we could get a quick move down. 64 broke below 55, but a lot of traders bought the bar, and we ended up with a bull doji. For the bulls, it's a high 2, 55. It's another attempt at a higher low major trend reversal, but it's only a bull doji. I think you can get out of shorts above 64 if you want, but I'm not getting long. Bear surprise 65, micro channel 60. Bulls are hoping lower low double bottom 38, expanding triangle 32, 38, 65, but closed below 64. Good for the bears. Not strong sell to close, but we're in a bear micro channel, so traders are selling, and they can get out above the high of the prior bar, especially if the bar is a bull bar. So you can get out above 64. 66, micro double bottom, 62, 66, but a doji bar and a 6 bar, 7 bar bear micro channel. I'm not buying above 66. And for the bears, it's a low 1, but bull bar 64, bull bar 66. I'm not eager to sell below 66 either. There are probably buyers not too far below 66, 65. Consecutive bear bars 67, 68, not all that big, so not all that bearish. 69, 3 bear bars. It's sell to close, but not all that bearish. I'd get out above a bull bar or 2 or 3 points above a bear bar. Bull bar 70, you can either get out above 70 or get out 2 or 3 points above 70. So the bears will low 1, 70. At this point, 10 bar bear micro channel. First reversal up, if we go above 70, it'll be minor. Traders will sell it. 71, a low 1, a bear bar closing near its low. We may accelerate down to the magnets below, especially yesterday's low, and become upside down at the end of the day. It's a reasonable swing short, but not a scalp. Bigger bar 72, bigger bar 73. So it looks like we're going to go below yesterday's low, outside down, which we did at the end of the day. Stop entry traders. The first stop entry trade that I would take would be below 5, a second reversal down from yesterday's high, bear bar closing near its low. So you sell below 5, you sell the close of 6. You can sell the close of 7 and 8, but I think we'll bounce. We're in a support zone. The two moving averages, yesterday's close, yesterday's high, yesterday's trading range. You could buy above 14, 16 you could buy above, but you need to get big bull bars, and if not, people will get out. You can sell below 18, or you can wait for two bear bars, 20. Excuse me, you can sell below 19, small wedge, lower high major trend reversal, or you can sell below 19 or 20, 24, 25 you can sell below it. Then we get that bull bar 26, so I would not sell below. I would not buy above. Next stop order trade that I would consider would be 35, double top turning down from the moving average, double top 28. So sell below 35, 36, disappointment 37. I'm not selling below 37. I get out of shorts and start to buy above 39 or 41. And then what about, is it buy the close 46, 47? I don't like to buy above the top of the trading range unless the rally is very strong and these bars are small. What about 51? Same thing. I talked about that. I said it's a third leg up, 44, 48, and it's at the top of the trading range. We still could get a double top 28, so I don't want to buy above 51. Really big bear surprise, 53. Double top 28. We should get at least a small second leg down, so it's sell to close. Reasonable to get out of longs above, get out of shorts above 55. A low one, 56, I'm not selling. Bottom of a trading range, 58, outside down, I'm not selling. Then a second reversal up, higher or low, major trend reversal, 59, a reasonable buy. Get out of longs and short below 61, maybe below 63. And then here, it's more sell to close, maybe sell below 68, 71, yes, 72, yes. Inside bar 74, I don't know. Pretty good bear bars, 71, 72, 73, getting bigger, closing on their lows. We're probably going lower, but I think we'll have a hard time getting much below yesterday's low. And we went a little bit below. Limit order traders, probably buyers below 1, sellers above 3. And then in here, not so easy. Probably buyers below 10. Here, sellers above 22. I did sell below 20. I did sell above 22. I took other limit order trades as well. Here, probably buyers below 26, below 28. What about selling above 26? I don't think I did. Bull bar closing near its high, high 2. I wouldn't do that. And here, buyers below 42, yes. And probably buyers below 48, but really small bars at the top of a trading range, not good. And then here, probably sellers above 70, but a bull bar, 10 bar bear micro channel, not an easy sell. So a good day for the bears, a good week for the bears, and so far a good month for the bears. We, as I said, may continue sideways into Wednesday's FOMC. We're up and down and up and down and up and down, and this may be a triangle. If we reverse up on Monday, we'll have 3 lows, 1, 2, 3 in here. And I think the market is going to try to go sideways into the FOMC. But with the war, it's always possible we could just open up the day, one day, with a 200-point gap down. Can we get a 200-point gap up? Well, to get that, we would need a peace agreement, and 200-point gap up, obviously, would be a tremendous surprise, but a peace agreement would be a tremendous surprise. Can you talk about a couple of the trades you took today? I did buy above 14, and I scalped out part at 5 points, and I probably got out the rest around the close of 19. I sold above 22 scalped out part at 5 points and the rest at 10 points, depending on the trading range. I bought above, I don't know if I bought above 39 or 41 for the disappointing rally, scalped out 5 points. I sold during 53, scalped out 5 points. I was doing mostly scalping out 5 points today. I sold 2 or 3 times in here for 5 points. I think I probably sold 68 and probably as soon as 73 opened. And I don't remember if I sold down here. And, I'd get, if I was wrong, I'd get out a tick above a bull bar or, 2 or 3 points above a bear bar. Question, well, would it be more of an ideal scenario to trade 2 contracts instead of 1, notwithstanding account size? For example, would it be 2 contracts where you could scalp out 1 contract and hold the other contract? I understand what you're saying. You often hear that. You trade 2, scalp out 1. The way I do it is this. If I trade 2 or some multiple of 2, right, I want a swing trade. But if the swing trade, and I'm willing to hold the 2 for a long time, if I get a really strong entry bar and really good follow through. But if there's anything disappointing about the trade, I'll scalp out part, like 10 points. So if it raises up 10 or 11 points and stops, I'll scalp out part at 10 points and swing the rest. But if it starts to turn on me, I'll get out. But in general, scalping for any reason, even if it's part of a 2 contract position, I think it's a bad idea. I think you go into the trade looking for a swing on both contracts. But if you're disappointed, which you usually will be because most swing trades end up as scalps, then you get out of one or both. Question, when price is different on the 5-minute chart compared to a higher level chart, which price do you focus on for support and resistance? For example, Tuesday's close on the daily chart versus the 5-minute chart. I think Forrest Gump, I talk about Forrest Gump would make more money than Einstein as a trader. And I do think that's true. I think it's so easy to overthink it. I used to have a big monitor with all kinds of time frames and correlated markets like the cash index and the spider and the NASDAQ and the Qs. And I was just stressed out all the time. Just too many things, and they never always lined up. So what I do is, you can see I have some higher time frame support and resistance lines here, right? Pay attention to how the market responds to them. But I'm making my trades based upon this, only this, and the other stuff, it has minor influence. And I don't really spend much time looking at it. Like the 1-minute chart, I don't think I even looked at the 1-minute chart one time today. The 2-minute chart, I don't think I looked at it even one time today. So I'm just trading the 5-minute chart. And if you get good at reading it, you don't need any other chart. If you get good reading the 5-minute chart, it should not take too long to be able to take 1 or 2 trades a day where you make 5 to 10 points. And I would focus on that and not worry about all these lines. Right, the bars are more important than the lines, and just look for reversals up and reversals down, or strong breakouts up, strong breakouts down, or breakouts that fail. Okay, hope everybody has a good weekend. Next week should be interesting with the war and the FOMC on Wednesday.